Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So on the gold, everything stands by far accurately with the scenario that we discussed. The market is tending to erase the bearish pattern that stands here. Yesterday and in 2 days before we said that we see some irrational price action with this sudden stop, and this market doesn't want to just continue upward direction where it should to do this, and shows the upward reversal suddenly, which could be treated as irrational type of action and the first bell of the possible opposite action. That stands right now on the market. Here probably we could erase the marking for this pattern, because within the few hours and today, tomorrow, maybe, I don't know, market will try to challenge its stop and hit the confidence resistance again. It's around 1883, 1888. This will be the barrier. Well, I'm not really there to suggest that market will break it this week, because we're coming to the end of the week, to the Thursday already. Fed meeting stands in the past, and mostly it was supportive for risky assets, supportive for dollar rivals. So that leads to overall appreciation. Bitcoin just as a champion. As you can see, it's really significant rally we saw on the Bitcoin market. Euro currency and Great British Pound also stands positive. This gold is not an exception, is moving higher. So everybody are aimed and stands in expectation of the wider stimulus from the Joe Biden administration. So this pushed prices higher across the board. So on the gold, it's a bit gradual tendency, but it's stubborn. So you can see it's some real pressure that stands on the market on the intraday charts. That's why the nearest standing target should be hit. But what will happen on the next step, we will see. So on the 4-day from chart, we still consider this ABCD pattern. That's some volatility that has come on the Fed statement, you can see. And market right now is continuing upward action. So currently today, we hopefully the market will reach this area. So its COP target is 1887. So we're watching for as the most probable destination point that makes an agreement with the daily confidence resistance. I'd suggest that when the reaching of the confidence resistance, and it's also an agreement, this is rather strong resistance, and I'd suggest the pullback. So some healthy retracement should happen out from this level. So whether this will happen or not, we do not know, but we are following just on the probabilities, and in most cases this happens. So that's why we take into consideration conservative target this week, and think that today, tomorrow's market will hit 1890 approximately, and stuck there for some time, showing either pullback or some consolidation around this level. Next will be the OP 1930, but since it stands above the resistance, currently we do not take into consideration. Let's see what will happen around the target. On the hourly chart, guys, if you do not have the long position, it's a bit, well, upside potential looks not very significant currently. So if we are aimed on 1890 at maximum, so $20 per contract on the gold, it's not really very significant. But for intraday trading for 1-2 sessions, it is possible, especially if market will show some pullback. And currently, on the pullback, you need to focus only on the most recent upward action, because by the Fed volatility, with this deep retracement, market has completed two things. First of all, as it has formed here the bullish reversal swing compared to this one, right? It has to show the deep retracement. That has happened on the Fed. It's approximately 50% pullback with this upward action. It should be treated as a deep retracement. Second, with this drop, market set the new tactical low for intraday performance. That's why you do not interested in the levels that stand below these lows. And above these lows, we have only two levels, 1860, 1855 confidence support. It's right here. It means that if you consider taking the long position, you could, for example, watch for some minor pullback to the 30% support around 1861, 1865 with the stops initially below this confluence, and just wait when the market will hit the final target around 1885. So that's the trade that you could consider if you're interested with that.